So we are now recording the session of International Corporate Tax on associating deductions with income. This is Module 8 in the course on the 861 rules. And this is the first of 3 webinars and 2 to 3 video calls that we'll be conducting on these rules. As I mentioned a moment ago to those of you listening in, these are the hardest part of the entire course. Many years ago, and we're talking 30 years ago, when I was trying to learn these rules in a prior incarnation that was a little simpler, I spent more than 40 hours just reading regulations and trying to digest them. I'm going to try to save you a little bit of pain on this, and we'll cover these in, I hope, enough depth in these webinars that you can then read the regulations and on 1 or 2 readings have some comprehension of them. The code is quite terse on allocating and apportioning deductions. The rules are scattered about, and I've listed some of the references in terms of what is required, and basically the code leaves everything to the regulations. The regulations are under 861-8 and a number of subsequent sections. They run about 150 pages in the printed hard copy version that I've got, where the print is very fine print. So they're lengthy. We'll be covering tonight the basic concepts and the rules related to deductions other than interest and R&D. We will save the interest and R&D for the latter 2 webinars on this. We'll be covering these basic rules again in the next webinar, and then we'll start in on the interest rules in that one. The foreign tax credit limitation is based on foreign source net taxable income. This is the part that we're focused on the most in this course, but this isn't anywhere near the only part that the 861 regs apply to. Now, I'm going to teach you some things that your colleagues will be amazed at, and some of your colleagues may say you're absolutely wrong when you repeat them, but you're not going to be wrong. So we're going to cover just the allocation and apportionment of deductions. Now, if we were in a live class, I'd ask people to raise their hands and say, have you ever prepared a multi-state income tax return? And usually everybody raises their hands. When you think allocation and apportionment, before you got to this course, you thought 3-factor apportionment. That's how the states do it. Federal rules do not work the same. Under federal rules, you identify the particular items of income. We talked about items when we were talking about the foreign tax credit limitation. You identify the particular items of income, and then you allocate and apportion deductions to those items of income. The 861 rules have some general concepts in 1.861-8, and these are the concepts that are the hardest to understand of the rules because they're so terse. Then there are special rules for interest, R&D, contributions, stewardship, and state income taxes. And you say, wait a minute, why do we do state income taxes? Well, it's at least theoretically possible to some theoreticians that a state may tax foreign source taxable income. The Supreme Court, I believe, disagrees with that view, so our coverage of state income taxes is going to be quite limited. Now, as we go through these rules, those of you with very much experience in cost accounting will say, you know, these rules really sound familiar. And if you've done anything in the 263 Cap A area, you'll say, you know, these are starting to sound familiar. Well, the 861 rules are basically cost accounting on steroids. These rules are pervasive in their application. Where cost accounting rules apply to cost of goods sold and inventory, these rules apply to every place that refers to allocating or apportioning deductions. Now, there's a list in the regulations, 861-8F, as in Fox, but the list says includes. It doesn't say including but limited to. It doesn't say including but not limited to. It just says includes, and it visibly omits a couple of things that are clear from other sections of the code. So these rules apply to the foreign tax credit, and by virtue of the regulations under Section 199, apply to the domestic production activities deduction, which simply has a cross-reference to these rules. They apply to passive activity losses. And computing a passive activity loss, you have to allocate and apportion deductions. And there's almost no guidance under the 469 regs. These apply to allocating deductions to tax-exempt income. You may say, well, you know, hold on, Section 265, there's a regulation on allocating deductions. Well, it's actually one paragraph of a regulation, and the regulation was adopted in 1958 and hasn't been amended since. So these 861 rules apply to 265. There was a question on the overview about office in the home. They apply to determining deductions related to an office in your home, and a whole host of other things. Let me read what it says in the regs. The rules contained in this section apply in determining taxable income of the taxpayer from specific sources and activities under other sections of the code, referred to in this section as operative sections. So these things you see listed on the screen, foreign tax credit, DPAD, passive activity losses, each of those is an operative section. Now, one of the things I haven't listed here, because we're going to cover it later, is subpart F. So again, the 861 rules are all pervasive. So let's go back to what the code says on this. The rules are pretty limited in the code. We're supposed to reduce specific items of foreign source income for deductions properly allocated and apportioned to those items of income, plus a ratable part of deductions not definitely allocated to an item of or class of gross income. And we're going to get to what that magic phrase there at the end, class of gross income, means momentarily. Interest stewardship, R&D, and some other items have to be apportioned on a consolidated return basis, as if all of the entities in the consolidated return group were a single entity. And the code says the secretary is to prescribe regulations. So these regulations have the force of law. They're not just, you know, things that are nice. The 861 regs have a lot of good guidance, but there's also good understanding rather than guidance to be had in two other parts of the regulations. The regs under the domestic production activities deduction, while not directly addressing allocation and apportionment, do have some good guidance on figuring out what different items or classes of gross income are. And the regulations under 263 Cap A and 471 on inventory and cost of goods sold have some excellent ways to understand better what the 861 regulations are talking about. So we'll delve into those a little bit also tonight. Let's start with defining some key concepts. First, what is gross income? And you say, okay, yeah, I learned this in Tax 1. Yeah, but you can forget it. It's not gross receipts. It's sales plus other income less cost of goods sold. So gross income is, if we're thinking of corporate returns, is line 11, not the sum of lines 1 and 4 through 10. It's line 11 is gross income. Deductions for our discussion here and under the 861 regs include losses. There are special rules on losses on sales of stock of subsidiaries and one or two other items. For the most part, though, losses on sale of any property are treated like any other deduction. Now, that's not losses on sale of inventory. That reduces gross income directly. So now we get to the really critical concept here that's sometimes a little hard to understand. What is a class of gross income? And at this point, I want to show you what the regulations say and read this. And you'll have to bear with me on a few of these things because I'm going to read the slide because it's so important. For purposes of this section, meaning the 861 allocation and apportionment regulations, the gross income to which a specific deduction is related is referred to as a class of gross income and may consist of one or more items or subdivisions of these items of gross income enumerated in section 61. So what does that mean? It means we sit at the deduction and say what income or what the desire for what income caused us to incur this deduction. What income does this deduction relate to? We don't sit at the income and say what deductions are related to this. No, we sit at the deduction and look out from the deduction to see what income we're talking about. Then we can go about allocating that deduction or apportioning it. Now, the regulations talk about allocation and apportionment. And here, shown on the screen, is the regs saying you must allocate and apportion. First, allocate deductions to what they directly relate to, and then apportion any deduction that doesn't directly relate to something. Here it refers to the statutory grouping of gross income or among the statutory groupings. So let's use one that you may be familiar with outside the international area, domestic production activities income. If we have a client or an employer who makes goods and sells them, as well as buys goods and sells them, we have to allocate the expenses between the making and selling and the buying and selling activities to figure out what qualifies for DPAD. By the same token, we have to do the same sort of analysis to arrive at foreign source taxable income in the general basket, foreign source taxable income in the passive basket, and other income that's kind of irrelevant in the foreign tax credit. We have to do the same kind of analysis in all the other places in the code that I mentioned earlier. So we have to allocate, then apportion. And here's another excerpt, the very next sentence in the regulations from the one shown last. And I'm going to read it. Except for deductions, if any, which are not definitely related to gross income, and which therefore are ratably apportioned to all gross income, we'll get to that, all deductions of the taxpayer must be so allocated and apportioned. Skip the parenthetical clause. All deductions of the taxpayer must be so allocated and apportioned. That means we have to do it for everything, not just some of the stuff, not just things we identify as related, everything. So what's the difference between allocating and apportioning? Allocating means identifying a one-to-one factual relationship between a deduction and some set of income. Apportioning means spreading a deduction over some set of income or some other deduction. We have to allocate deductions to the class or set of gross income or the items of gross income to which that deduction directly relates. Then we have to apportion deductions that don't relate to particular sets of income. Now these sets can be very encompassing. For instance, our 10K filing costs relate to all of our gross income. That's the class of income to which it relates. So just getting to that allocating the deduction to some set of income doesn't necessarily solve our problem of what's my net taxable income. It's merely the first step. Then often we have to apportion that deduction among those various things to which that are included in that class or set of gross income. So this can require tiered allocations. It can require first allocating and then apportioning. Sometimes first allocating, then apportioning, then allocating what got apportioned. So it can be very complex. Sometimes it's pretty simple for a particular deduction. Sometimes it's not. As a quick example of something that is not, the costs of your payroll department have to be apportioned among all of your employment costs that then gets partly allocated to cost of goods sold, partly to SG&A expenses, partly to foreign, partly to not. So payroll department costs tend to go all over the place. And you may find here, just like you do in 263 Cap A, that you have to do multi-tier allocations. We'll talk more about the 263 Cap A rules later as they relate to costs that in those rules are called mixed service costs. The concept is very relevant here in the 861 regs. Now, the key here is determining factual relationships. Sometimes you say, man, I know this is associated with that. Exactly. But you can't get the data to be able to do something with it. You may say the most reasonable way to apportion this expense is based on square feet used in particular activities. If you're apportioning rent expense, for instance. But nobody that you can get in touch with seems to know the number of square feet. So before you decide what you're going to do in terms of allocation and apportionment, Make sure you can get the data you need. Now, at this point, you might be thinking, you know, I'm really good on Fast Tax or Pro System, and I don't remember ever seeing anything that even lets me put the data in there. Well, you're correct. Go System and Pro System don't have the ability to do any of this stuff. There's only one software package out there that does it comprehensively, and that's Corp Tax. And I know a few of you are Corp Tax users. There are three other packages out there that do it for a limited set of stuff. Deloitte has its own version of Corp Tax software that it's using since it used to own Corp Tax. Ernst & Young has its own allocation and apportionment software, but they tend to use it on a somewhat more limited basis. An outfit called Forte Tax out of a suburb of Chicago has some really good allocation and apportionment software, but it's used only for disk and similar stuff. And Grant Thornton has some really good software, but they only use it for DPAD. So this is an area that often requires additional spreadsheets, a lot of additional work. If you're on Corp Tax, it requires a lot of additional work, but Corp Tax will do the spreadsheets. One of the aspects, by the way, of the project will be coming up with a spreadsheet that does this allocation and apportionment on at least a very rudimentary basis. So in doing the project and in getting ready for it, including on our next webinar, we'll go through some examples of how to go about this. So let's talk a little bit more about allocation. Again, I'm going to read this. For purposes of this section, meaning 861-8, the whole thing, the gross income to which a specific deduction is definitely related is referred to as a class of gross income and may consist of one or more items of gross income. The rules, this is direct quote from the regs, by the way. The rules, meaning these rules, emphasize the factual relationship between the deduction and a class of gross income. So this factual relationship is really the key to everything. While we have this up, I'm going to read you a little bit more out of some of my favorite regulations. This is a good bedtime story, isn't it? Relationship to activity or property. This is 861-8B2. Where a deduction is incurred as a result of or incident to an activity or in connection with property, which activity or property generates, has generated, or could reasonably be expected to generate gross income, such deduction shall be considered definitely related to such gross income as a class. And then here's the kicker: whether or not there is any item of gross income in such class which is received or accrued during the year, and whether or not the amount of deductions exceeds the gross income in such class. So we have deductions considered related to a class of income even when we're not currently receiving any of that income. So let's talk about some allocating techniques. As we'll talk about a little bit later when I speak on the 263 Cap A rules. We may, after we've decided this deduction relates to that income, we may need to then apportion it. We may, though, decide that this deduction relates not to this class of income, but to some other deduction. And in that case, what we have to do is a multi-tier allocation. The 861 regs in ATB3 specifically talk about supportive functions and the expenses related to supportive functions. The concepts here in the ATB3 regulations are sort of a Reader's Digest version of the 263 Cap A mixed service costs regulations. So we're going to talk about those in a bit. Doing these allocations has to be based on the facts. Doing the calculations, compiling the data can be very time consuming. So this is an area that, in my experience, has been more than 50% of the total time involved in the international side of tax returns for non-simple companies. When we had multiple baskets, more than just general and passive, I've got to tell an ancient story. Back when the 1986 Act was being debated in Congress, this was in 1984 when the first iteration of it came out. A representative of before I go there, one of the things in it was the 9 baskets that we don't have anymore. And a representative of the National Association of Manufacturers made a statement that most people treated as just silly. But it turned out to be, if anything, slightly understating the case. He said introducing the baskets and the consolidated return stuff would increase the cost of compliance in the international area by 2,000%. He was on the conservative side. It was probably more than that. And the big reason for that massive increase was for every basket that you've got to do this full 861 allocation and apportionment. And this is a sinkhole for time. So how do we figure out what the factual relationships are? Absolute number one thing, ask questions of the operations people. If you've never met some of the operations people, now's your chance. There are a lot of really nice people out there that you as an accountant, especially in the tax department, never get a chance to talk with. Here's the chance. I ended up many years ago making a good friend, many years ago. We've lost touch with each other since. A good friend who was in the inventory side of the company I was working for, and met him because I needed to ask some questions about inventory. He wasn't an accountant. He was an engineer. So here's your chance to go talk to the engineers, the salespeople, the people out in the factory. And at this point, I've got to tell a couple of war stories. And this departs a great deal from the international area. I was asked to figure out when a pipeline went in service, because under the depreciation rules at the time, there was a modified half-year convention. And this was $110 million. This is in 1979 dollars. Think $500 million today, that was placed in service during the taxable year. And it was unclear whether it went in service in June or July. And one versus the other made a difference in, remember, depreciation is a timing difference. And with things that only have about a 10-year life, like pipelines did at the time, it turns around fairly quick. Well, the difference in interest the company would pay on its bonds, this was a Fortune 100 company, the difference in interest exceeded the entire budget of the tax department for each year. And to figure out whether this piece of pipe went in service, I wasn't an engineer. I had to go talk to a bunch of the engineers and explain some concepts to them, then have them explain some concepts to me. I ended up doing a schematic diagram of how a pipeline works from wellhead to customer. And 4 years later, while I was at a different company, that schematic diagram came back to me as part of a position being taken that was on a position I had come up with many years earlier. And it's this sort of thing, this ask questions of the operations people, that can save your clients or your employer a great deal of money, and it's fun. So take this opportunity to do it. There are some sources of information you may have within the accounting department or even within the tax department that can be very useful. Profit or cost center reports are just invaluable in allocating and apportioning deductions. If you've never looked at profit or cost center reports for either your employer or your clients, for other than the small clients, you really should go and look at some of them. They have a lot of good information. Sometimes it's a lot of information, but when you're doing this allocation and apportionment, it can save you immense time by having those things. Another key tool that we use is questionnaires and checklists. As we'll talk about in stewardship expenses, the questionnaire can be tremendously useful and very easy for you, very easy for other people, and gives you very good results that the IRS will rely on. All of the things we're talking about here will start to sound like activity-based costing. For any of you that have had more than one cost accounting course, you've certainly encountered ABC, which came out in the mid-'80s. It's my personal pet theory that the activity-based costing rules were devised as a result of the 861-8 rules, which came first. The 861-8 rules first came out in 1977. Activity-based costing was about 6 years later and incorporated an awful lot of the same concepts. So after activity-based costing, then came Section 263 Cap A, which formalized a lot of these rules. So here we have this continuum from the 861-8 rules on through ABC and 263 Cap A. So let's delve into a little bit more of this relationship of a cost to an activity or to property. And again, I'm going to read it. A deduction shall be considered definitely related to a class of gross income and therefore allocable to such class, not apportionable, allocable, if it is incurred as a result of or incident to an activity or in conjunction with property from which such class of gross income is derived. In other words, right here is the principle of activity-based costing. And this was in the original 1977 regulations under 861. We look to the drivers of the cost to determine what class of gross income it relates to. If the driver of the cost is selling deluxe widgets, then that cost should be allocated to the deluxe widgets. Now that doesn't necessarily get us to the final answer of what's our net foreign source taxable income, but it gets us to the first step of it. And I promised we'd talk about indirect and supportive costs. The 861 regulations talk about these, but just a little bit. The 263 Cap A rules talk about them a great deal. Now, I have not put it in your assignment, but one of the things on your suggested reading list is various parts of my book, Income Taxes in the USA. And one of the chapters in Income Tax in the USA, chapter 23, deals with coming up with cost of goods sold. And I will go through some of the aspects of that I think are really important here, both in the cost of goods sold area and outside the cost of goods sold area. In this indirect and supportive costs area, some business functions support other functions. The costs of administrative service and support functions must be apportioned among the functions supported. Now, if you read the 861 regs on indirect and supportive costs, it says exactly that. But the words I just read you are out of 263 Cap A-1E4. Some supportive functions also support other supportive functions. So let's think about this a little bit. Let's say I have an IT department and a payroll department. Well, one of the big users of IT is the payroll department. But IT people get paychecks. We have kind of a circular relationship here with some of our supportive functions. So how do we start? How do we go about allocating this? We start someplace and work our way up. It often doesn't matter where we start as long as we don't double count anything. So with some of these types of expenses, multi-tier allocations are often required. Generally, we start with allocating the direct costs of those functions that are supported by the fewest other functions and work our way up. So, IT doesn't have a lot of support from other functions. It tends to be the kind of the ultimate service function, and HR and payroll are about the only things that support it. So often apportioning IT first works, and then apportion payroll, HR costs. Let me give you an example. Batty makes baseball equipment and sells it worldwide. Batty has contracted the payroll function to a payroll service. Batty's IT department maintains a computer network. Batty has an HR department that hires employees and administers benefits. Batty provides a free lunch for its on-site workers and has an in-house lawyer who reviews all company documents, including pension plans. Batty could choose to allocate the payroll costs first, since it contracts those out, followed by the IT and the lunch costs, since everybody's getting a free lunch. By the way, I used to work for a company that had free lunch. It wasn't free. And then the in-house counsel and the HR departments. So we have to figure out where to start and then just work our way up in these multi-tier allocations. If your firm or your employer is doing 263 Cap A calculations in a reasonably decent manner, go take a look at some of those and you'll see this multi-tier allocation approach at work. If you look at the 263 Cap A work papers and you don't see any multi-tier allocations and you don't see the simplified mixed service cost method, then I got bad news for you. They're doing it wrong. So the 263 Cap A regs refer to these indirect and supportive costs as mixed service functions. And here, let me go through just a quick list of what some of those are. Payroll, human resources, computer services or IT, accounts payable. Hey, you got to write checks to everybody, right? Security services, and legal. Now, there are some other things that usually aren't mixed service. Marketing, selling, advertising, overall management. You say, wait a minute, overall management, doesn't that apply to everything? Well, we're not talking the head of operations here. We're talking the CEO and the CFO. In other words, the C-suite. So there are a number of other things. And the 263 Cap A regulations give you a lot of good examples and things to think about. So when you're looking at how to go about allocating deductions to income for the foreign tax credit or the domestic production activities deduction, read those 263 Cap A rules, particularly on mixed service costs, for not rules, but education. There's a lot of good information there just waiting for you to read. One of the ways that you can allocate costs is by apportioning the costs based on some other deduction. Cost accountants have a special term for that, for a particular way of doing that. It's called a burden rate. A burden rate's a wonderful thing in the 861 regs. You won't find that word used at all in 861. It's in 263 Cap A, but it works well in 861 regs too. A burden rate is a rate of cost applied to some other variety of expense. For instance, payroll costs applied to hours of labor or dollars of labor. And this burden rate, I've gotten 2 phone calls with messages in the last 10 minutes. Are people still out there? Okay, I can hear somebody, so good. Sometimes with webinars, I worry that somehow the connection's been lost and the software is telling me it's still there. So we'll continue here. A burden rate is a really useful sort of thing. I can determine what my payroll taxes, health insurance costs, other fringe benefit costs, various other payroll-related costs are in relation to payroll dollars or to labor hours or something else. And the 861 regs tell me explicitly that I can use this sort of a way of allocating costs. In fact, the 861-8 regs give me this sort of laundry list of things that can work, all very condensed in one sentence. It says you can use such thing as labor hours, labor dollars, square feet, and goes on for a number of other things. The 861 allocations are not strictly dollar-based. often allocating costs on some basis other than dollars is the most appropriate for that cost. And that is what we have to get to when we are trying to allocate these costs that are supposed to be factually related to a class of gross income. We need to use the driver of that cost. Again, an activity-based costing term. We have to look to what drives incurring that cost, and we don't have to, we should allocate the costs based on that. The regs also provide us two defaults that we can always use. We can always allocate any particular cost apportion any particular cost based on either revenues, gross receipts, or gross income. Those are always allowed under the regulations. So in addition to this factual relationship, we have some defaults. And these defaults can be useful in two kinds of situations. And by the way, picking which one you want is not a method of accounting, but you're saying, here's what the facts are. So if you want to change it, all you have to do is say either the facts changed or, finally, I was able to get good information. So our choice I won't say each year, our choice, changeable from time to time without IRS approval, is to apportion based on some factually relevant factor, or apportion based on sales, or apportion based on gross income. Now, the two things that this comes in handy for are, first, where I don't have the data that I need, and I have to have that as a fallback position. You say, oh yeah, sure, we have great information systems. I can get anything I want. Yeah, right. If you've got SAP done right or PeopleSoft done right, maybe you have a shot at it. If somebody thought to do it right, and if somebody knows how to generate the report, and more times than not in my career, I've been faced with not having the data I needed. So these fallback positions can be important. Excuse me. Another real key area is where it's better in terms of the result. I can always pick sales or gross income, no matter what I did before. Now, the IRS might come in and say, wait a minute, hold on here. I can get the data from you and come up with a better way to do it. If you have an industrious revenue agent who really knows what he's doing, and the numbers are big enough to be worth it for him, then maybe you have some risk there. Not risk penalties, because you're always allowed to do it. But he can say, if he can prove the case, no, this particular way of apportioning this expense on square feet is more factually related than doing it on sales or gross income. So always look at these not just fallback positions and see if they help you. Now I'm going to kind of step out on a limb here and say something that some of my colleagues have disagreed with from time to time. But I've won with the IRS even when the situation was asked and looked at. Not just glanced over and passed on, but asked and looked at. 263 Cap A rules have a thing called the Simplified Mixed Service Cost Method. And it's my view that that simplified mixed service cost method can be used to apportion indirect and supportive costs. It can make your life simpler, but it can also sometimes give you a better result. If you adopt the simplified mixed service cost method for UNICAP, for 263 Cap A, for pricing your inventory, then you're locked into it as a method of accounting. If you adopt it under 861A, the 861-8 regulations, I don't think it's a method of accounting. So you have the potential of changing it. Don't adopt it lightly unless you think it's going to be of long-term benefit, because you may have to justify it. Remember, factual relationships is the key under 861. Bear with me a second. Okay. And again, this is from chapter 28 of my book, and I'm just going to read a bit here. The basis of apportionment of particular costs must make sense and should be used consistently unless the facts change. And then the regulations give some examples. I'll go ahead and read those. They include head count, number of people, square feet, units produced, labor hours, labor dollars, sales dollars, gross income, or any other base that fits the facts. So you have a lot of choices here, and you're not limited to the ones mentioned in the regs. It's clear from the regulations that it should be whatever the thing is that's driving that expense, if you can get that information in a usable form. And I think with that, consolidated returns. This will be our last topic for today. In 1986 Act, Congress said certain things must be apportioned or allocated on a consolidated return basis rather than company by company. The biggie there, the big two, are interest and R&D. But Section 864E6 says, and this is on the consolidated return aspects of allocation and apportionment, says expenses other than interest, which are not directly allocable or apportioned to any specific income producing activity, shall be allocated and apportioned as if all members of the affiliated group were a single corporation. So H64E is saying here, in some other places that we'll get to later, you've got to apportion consolidated interest expense, you've got to apportion consolidated R&D expense, and then you have to apportion any expenses not directly allocable or apportioned to any specific activity, not specific income, any specific activity. And here we have that activity being, we have to look to the driver of a cost based on the activities undertaken that incurred that cost. So with this, I'm going to unmute everybody and we'll start taking questions either verbally or through the chat box. And we're at 7:10 p.m. now, so we'll keep going for questions for up to 10 minutes. Oh, before we go there, though, and I'll keep recording this, one thing I wanted to talk about a little tonight is the exams and the quizzes. First, on the exams. Each exam will be 50% multiple choice. The other 50% may be some combination of short answer, list something, do something. The source and subpart F module exams won't contain any numerical calculations. The 861 portion will have something real simple, or may have something real simple in the way of numerical calculation. I'm staying away from those as much as possible in the exams and also in these presentations, so we can focus on the concepts. So again, the exams will be half multiple choice and half other stuff depending on the particular topic and what fits it. And a few words about the quizzes. As I've tried to emphasize all along, there are lots and lots of quizzes to do two things. One, provide you a good solid base of points that hopefully every one of you can max out. And don't quote me on that to other faculty members. You can quote it back to me. And secondly, to really reinforce the knowledge in the part, you've got to read those questions in the quizzes carefully. You need to be prepared for the quizzes more than just one quick watch of the particular video. A couple of you have commented that you've found what works best for you is to watch the video without the quizzes first, read the code and regs, then watch the video a second time with the quizzes, take the quizzes, and the people that have commented that have aced the quizzes. So sounds like a good plan to me. Watch the video or listen to the webinar, just like you'd listen to a lecture. Then read the code and regs, and then consider doing something that has a score attached to it. So with that, we're back to questions. A question on educanon. I'm still trying to learn the thing. I went to a conference over the summer in Denver, put on by the Online Learning Consortium, which is a heavily grant-funded outfit trying to promote online learning and encourage educators to be more aware and knowledgeable. And several of the people there commented on using educanon very effectively in primary and secondary grades 1 through 6. I think my not very big difficulties, but my some difficulties in learning educanon, and some of you have difficulties, is because we're too old. Little kids seem to be able to pick it up pretty well, so play with it. If you take a quiz and think you've really screwed it up, call me, and I can usually reset your score so you can give it another try. This doesn't mean I'm going to do that multiple times, but if you feel like you really screwed things up because you didn't know how to use it, call me, talk to me, we'll walk through it. I'm here. Next question was, how long are the exams? The exams are 30 minutes. And I mentioned this, I think, in the syllabus. Officially, they're 30 minutes. The way we're going to do it, since we're doing all of it remotely, is I will send out at a few minutes before the time scheduled for the exam, excuse me, which is 6:15 for next week. I will send an email to all of you, one of my broadcast emails, asking simply, are you there? Are you ready? And when I receive your response, within 1 to 2 minutes, I will send you the exam. you'll have 35 minutes to send it back to me. And if you miss that deadline by seconds, don't worry about it. But again, the exam is formally 30 minutes. I'll give you 35 so we make sure we're not fighting technology. The exam will be distributed both in the text of the email and separately as a PDF. So if you're sitting at a printer and want to print it out, print out the PDF. It'll be easier to read. If you're not, use the email, copy and paste. Respond however works best for you, whether in a Word document, in text of an email, in a fax you send to me, and I'll put my fax number on it. Respond in the way that works best for you. And Liz asked, is 30 minutes enough time for an exam? Well, I've been doing these international courses at Fairleigh Dickinson for 20 years now. I'm right at 20 years. I started in 1995. And I think I've gotten to be pretty good at judging what the right length of an exam is. Does that mean you have lots of spare time? No. By the way, the exams are open book, open note, anything. And one reason for the timing of that is with any of these exams, if I gave a student who hadn't studied 6 hours to do the exam, they could get 100 on it. So part of the testing aspect is this time limit. And I curved the grades on the exams. And all of the exams put together only amount to 30% of your course grade. Very heavily on the project and this big battery of reinforcement quizzes. And I asked, what's the best way to prepare for the exam? Everything in this course is driven by the code and regs. Everything. Read the relevant code and regs. They're in your assignments. Reading the code and regs. I did a survey. It's been 15 years, but I had some free time when everybody else was doing individual returns early in April one year. And as an international guy, I never did individual returns. So I thought, I'm going to go open up the RA, it used to be a different service, and see how many court cases there are in all of the international area. It's less than 500 cases, rulings, private letter rulings, rev rules, everything, less than 500. And most of them were on trivial points. So everything's in the code and regs. If it's not in the code and regs, it's so esoteric it won't be on an exam. And the exam is just going to be on the source module and the overview, really just on the source and treaties modules. The overview covered the entire course. So just source and treaties. I'm not going to be asking anything except source of income and treaties. Okay. Will the agency rule be covered? No. There won't be any questions on agency. You need that for your own real-world practice. But that's strictly law. Bear with me a second, and I'll hold up a prop. Well, I thought I would, and now I can't find it. At some point I had, and I can't locate, the Hornbook on agency. If you want to delve more into that, I suggest you just get a used copy of it from Amazon. Every law school in the country teaches a course, usually a required course in the core curriculum on agency. But for some reason, the business schools kind of pretend it doesn't exist. So it won't be on the exams. Well, we're at 7:20. Let's take a little bit of a break, and then we'll start the video call for those of you that did not do the Saturday call. We'll be covering the exercises on foreign tax credit, and you can download those from Web Campus. So if you are participating in this call, make sure you've downloaded those. And at this point, we'll call it quits for the webinar tonight and reconvene as a video call. Thanks.